So, hello everyone, and welcome to the second edition of the Outlook India Insurance Summit. We welcome you today to discuss a very interesting topic. And today we have Mr. Ritesh Kumar, Managing Director and CEO, HDFC ERGO General Insurance, to discuss with us the new trends in insurance and their viability. Hello, sir, and very welcome to this fireside chat.
Thank you.
So perfect, sir. Let's just get into it. I think the world is currently in transformation. The way we're interacting with each other, the way businesses and consumers are selling and buying products and services is changing. Given the importance of the insurance industry, what are the new trends that you are currently observing in the sector?
Hi, Deepika, and thank you for having me on the show. And see, broadly, there are quite a few themes which are playing out, but
Sure.
if I restrict myself to three main themes, which I see sort of per se. One is the theme of consolidation. What we've very, very clearly sort of seen in the sector over the last many years, that while on one hand, there have been change in shareholdings which have happened. But if I keep that aside, we've actually sort of seen three consolidations happening within our industry. Which are just about 32 odd players. And we've been fortunate to be part of two. When we acquired L&T General Insurance way back in 2016, and then a couple of years back, Apollo Munich. And now Bharti AXA has been acquired by ICICI Lombard. Apart from the non-life side, we are also seeing some of these consolidation themes now beginning to sort of happen on the life side as well. Sort of with our life company sort of having acquired Exide Life. So that is clearly sort of one trend sort of that one sees happening. Of course, apart from that, there is this entire talk in terms of, the privatization of the sort of public insurance companies as well. That's the other theme sort of per se. The two other themes which are there is that I think we are gradually beginning to see insurance from being a push product to becoming a pull product. And I think COVID has had a big role to play in that. And then I think the whole level of awareness around insurance and more specifically health insurance is something which has sort of moved to a next level. And then we've actually seen very, very robust growth rates for the industry on the health insurance side. And yet the fact remains that more than 40 crore Indians do not have an insurance policy on health. And if to this we were to add the fact that how many of us have a policy but do not have adequate sum insureds around that. Okay, so consolidation theme number one, awareness and insurance becoming a sort of a pull product is number two. The third would be around, again, connected to, in a manner of speaking, what's happening to the larger industry, which is basically the whole sort of thing around sort of increased adoption of digital. And I keep saying that I think COVID has sort of helped us take a 3 to 5 year digital leap. And that's clearly something that we see, whether it is from right from a sort of prospect sourcing to a policy issuance to sort of servicing sort of the policies to claims administration. The entire manner in which a customer talks to us. So these are largely the three bigger themes that I would sort of put on the table.
Perfect. And I think, sir, the times that we are currently in, it's very difficult to talk about any trend in the landscape without mentioning digitalization and this whole transformation towards leveraging digital technology, which has myriad benefits. But maybe, sir, two things I would like to discuss here. One is, of course, how technology is one driving customization, because generation today is eschewing cookie cutter solutions in favor of more customized solutions. So how technology is helping customize solutions in the insurance space. And as well, there's a lot of, because it's so easy to shift products because of digitalization, how is it also endorsing brand loyalty?
So, see, we are part of a larger ecosystem.
Sure.
Now, when I sort of see the way we interact in our personal lives, we are getting increasingly influenced by the Amazons and the Netflix.
That's right. Yeah.
And we cannot be behave in a particular manner sort of while we are sort of buying things there, and behave differently when it comes to insurance. And some of the trends which I clearly sort of see playing out, and more specifically with the youth today, is the whole sort of choice of time. So I need to be able to sort of buy things when I want. Instant gratification, the whole sort of customization sort of around the products. I mean, and very, very importantly, from a servicing standpoint, consistency and transparency. I mean, today when we order things, we are actually able to track that it is 40 minutes away, and now it has sort of left the restaurant, and it is so now this is something which, as an industry, we ourselves will have to sort of move in. Now, what sort of one is happy to say is that I think as an industry, we've taken strides in this. I mean, the general insurance industry is one which has been sort of working fairly sort of in a robust manner from an insurtech sort of perspective, or a AI first sort of perspective. So today, I mean, when it comes to say, I mean, selling retail products, I mean, retail products of sort of most of the general insurance companies is something which is today available online. So i.e. a customer has a choice of time, sort of when he or she wants to buy it. The second thing which has happened, which technology has enabled to do, I mean, I would simply take an example of, say, if till yesterday, if somebody wanted to insure a vehicle which had not been insured earlier, I mean, there was a break-in in between. So there would need to be a break-in inspection. Typically, something which would take up to I mean, anything starting from 7-8 hours from an insurance perspective, because one would need to physically send someone to inspect the vehicle. That report will come in. So somebody would then form an opinion on the vehicle that whether it's insurable or not, and then the insurance would happen. I mean, today with, I mean, we've created a AI sort of enablement wherein the customer takes the photographs, the videos sort of on a particular sort of app. The moment he clicks and he sends it to us, I mean, within 180 seconds, for more than 50% of them, we are able to auto approve. Okay, so I mean, and this was just another example which I thought I would give from an instant sort of gratification perspective. I mean, on the other side, there are a host of things which are happening from a customization perspective. I mean, today when I, for instance, on motor, and then I mean, if you would talk to the actuaries in any of the companies, they would say that, I mean, for a motor insurance policy, there are more than, I mean, say 1 million sort of data points, sort of basis which they decide that what should be the right pricing for you, Deepika. I mean, basis your location, basis the make, model, the vintage of the vehicles, whether you want a zero dep, a non-zero dep, a host of other add-on features. So almost about 1 million plus sort of unique price points sort of would come in. Okay, so I mean, and we are still talking in terms of some of these things which the variables and some of the telematics would sort of really enable us to do. And the third one is that from a servicing standpoint, one of the things that would very, very clearly happen, and something which sort of enabled all of us to service our policyholders, I mean, sort of during the COVID period. I mean, we need to understand that the general insurance industry is a very, very transaction intensive industry. So for somebody like us, which are with a 6% sort of market share of the industry, I mean, we handle about 50,000 motor claims a month. We handle about 60,000 health claims a month. I mean, so with such kind of volumes, and even during COVID, we had to service that. Now, a lot of this servicing, request for claims, auto assignment of surveyors, I mean, change in the policy, the endorsements, all of those things today through chatbots, through voice bots, through host of them is through IVRs, is something which has almost 50-60% in our case is already automized sort of through this.
Perfect, sir. So I think basically what you're saying is that actually technology or digitalization is maybe elevating multiple points on the insurance spectrum or the cycle, starting from maybe policy assessment to risk assessment to claims, and then servicing as well. If maybe shortening these cycles and making it more efficient, if I'm reading this correctly.
Absolutely. I mean, the cycle times are getting reduced. I mean, earlier to approve a cashless, I mean, insurance companies would take 4 hours.
Right.
Okay, and then it was reduced to 2 hours. And during the COVID period, there was a requirement because hospital beds were actually in short supply that you should be able to give discharge in 1 hour.
Correct.
Okay, I mean, today on an average for a cashless, we take under 30 minutes to sort of approve a cashless. And a lot of this would not have been possible in a manual environment. This is all sort of all thanks to a host of digitizations and then all these tools which are today available to us, because of which we are able to do that. So absolutely.
Perfect. So, sir, at the beginning of our conversation, you spoke about collaborations. From that perspective, what kind of collaborations is the industry looking at from a fintech perspective? A lot of these technologies being built in-house and expertise is being created in-house, or is it through collaboration with insurtechs and fintechs?
No, it's basically, I mean, today no industry can afford to say that we will do everything ourselves. And I mean, collaboration is the is the buzzword today, so to say. So you are absolutely right. Like any other industry, I mean, there is a host of collaborations which are happening with the fintechs, with with host of other players. In fact, what we've also done is that we've actually sort of recently announced and got into a strategic partnership with the IIT Bombay. I mean, and this is to sort of enable us to accelerate our innovation efforts. And what we are sort of really looking at is that, I mean, can we work with the reputed faculty of IIT Bombay and the talented student community to sort of get some strategic business solutions to the normal problems. And then, I mean, and the whole sort of effort is to, can we leverage the startups at the incubation stage sort of itself and do that? So, I mean, so this is just one example of what one means by collaboration. And then apart from this, obviously, I mean, there is a constant effort. And then when I say this, I mean, I largely speak for the industry because this is exactly what is happening across sort of our other peers in the industry.
So, sir, would it be fair to say, I mean, in my mind, insurance is always, it's a legacy industry, right? It's a behemoth. So these kind of changes that we're currently witnessing, collaboration, leveraging technology, it's really a big change for the industry as a whole. It's a big shift, right?
See, I mean, to use a cliche, I mean, constant is the only change. So, I mean, this is something which I think we need to adapt, we need to change to remain relevant. The customer expectations are changing. And then, as I said earlier, I mean, if we are part of a larger ecosystem, if the way a person deals with the bank today, that is changing. If the way one buys things that, sort of through e-commerce platforms, that's changing. And the way I buy an airline ticket is changing. The way I sort of transact on a stock exchange is changing. Why shouldn't the way I buy insurance change? Okay, and I mean, so I think in order to stay relevant, sort of as an industry, I mean, we need to be equal to the task. If I were to add to this, the sheer fact that there is still a significant level of sort of under penetration, sort of from an insurance product standpoint, and I mean, just to rattle some numbers, our insurance penetration, the non-life insurance penetration is still 1% to the GDP.
Correct.
And that's more like 2% in an Asia Pacific context, or sort of much larger in a European context. So there is a fair coverage that we need to sort of do. And then obviously we'll have to stay relevant. I mean, one of the things that we need to remember, I mean, typically every year there is almost about 1.5 to 2 crore individuals sort of who become 18 years of age, or so to say, who get into the insurance buying age. I mean, and if you ask me, our challenge is to stay relevant for this younger audience, because these are the people who are new insurance buyers. And therefore it's very, very important that I mean, and what they've been used to earlier, as I said, was the Amazon and the Netflix, and I mean, I'm just using two of them as names over other things. And therefore it's very, very important. And to me, actually, I mean, if you ask me from a relevance perspective, we sometimes undermine the importance of transparency. I think one thing that technology does is that it sort of improves transparency many folds. I mean, because you get, you buy what you see. I mean, you are actually able to know that at what stage is your policy issuance, what stage is your endorsement, what stage is your service request, what stage is your claim. So it's I mean, so in order to stay relevant, we cannot afford to remain a black box. And so that to my mind, and what one is sort of very happy to say, I've been part of this industry now for about sort of close to 20 years. I mean, industry over the last 20 years has taken very, very significant strides, sort of on all of these dimensions.
Perfect. I think much of that, those leaps that the industry is taking is also, I think, fairly tangible and visible, not only just within the industry, but I think to multiple outside stakeholders as well. And I think another thing that maybe the industry is focusing on, which I've been reading a lot about, is product side innovation, right? Because now, unfortunately, within the insurance space, when people go to buy insurance, there is this whole factor around affordability. And it is automatically assumed that something where the premium is less is better than something where the premium is high. And that leads to inadequate insurance. And there are several ways by which the industry is probably tackling this. For example, bite-size insurance or specific insurance covers. So can we discuss that a little bit in terms of innovation?
So I think there are a few trends which are playing out there. One is that so one is, as you rightly said, I mean, bite-size insurance, wallet insurance, or HSization of insurance. I mean, by whatever nomenclature you say. Wherein what you're saying is that instead of having a product which is a comprehensive product, but you only need 4 features of this and don't need the remaining 4 features, and I need another 3 features and don't need the 5 features. So one is, can we break the product into the basics, so that people buy what is relevant and don't end up getting things which are not relevant for them. Sure. And that is something, and that is exactly what is meant by volatilization of the product, wherein you are saying that why do I need to spend 5,000 rupees on a product? I'll just pay 80 rupees and buy, say, a vector-borne disease sort of cover for 10,000 rupees a day or something like that. Okay, so that is element number 1. The other thing which is happening is sort of around standardization. Sure. So and here, in fact, the regulator has sort of been very, very proactive sort of on this, wherein what they are saying is that let's have a base product, which is a simple, easy to understand product. The base product sold by company A will have exactly the same specs as that sold by company B and company C. Okay. So this would help, say, for instance, in a rural penetration. This will also help in bringing the price down. So, for instance, the Arogya Sanjeevani is really the base product from a health hospitalization perspective. Okay, so this is one. The second aspect which is there, which sort of hitherto was not there in our industry, is also around getting sort of policies on a EMI platform. Now, if I was to just say that, if we were to say, for instance, for a minute, look at what's happened to the mutual fund industry. I mean, the moment SIPs have come into existence, the number of people buying mutual fund, I earn 40,000 rupees a month. I can still afford to sort of put 1,000 or 2,000 rupees a month in a SIP, and this way sort of have savings. I don't need to go in one go put 40,000, 50,000. So the same holds good from an insurance standpoint. That do I go out and spend, if I earn 40,000 rupees and I need to spend 8,000 rupees on an insurance policy in a year, in the month that I need to pay for it, it obviously impacts my, the cash flow. But if the same was done on a EMI platform, and it's the 8,000 becomes 750 rupees or 700 rupees a month, that makes it far easier. So I think one of the things that we will actually sort of gradually see in a big way, and more specifically on the health side, sort of would actually be sort of around the entire thing on the EMI. Okay, so this to my mind, would be some of those things which would basically sort of play out. So small ticket options, options which are stripped of, a basic version options, and then for everything, so it's almost like a modular concept which would come in, which technology obviously will help.
Right.
So you come in and you buy a basic product, and then you can with another 100 rupees addition buy something else, and all these sort of add-ons are there. For sort of improving the whole coverage.
And I think that also ties back to our original thoughts around customization, something which today's generation is more accustomed to. They're click happy and they prefer customized products. So from that perspective, and I think something that you brought up, which I was not completely aware of before our conversation, was the standardization aspect. And I think even from a rural level, like you said, when you strip the products, they become more affordable, yet they can the true benefits can accrue to the buyers, and standardization enables them to do the relative comparisons and make the best decisions. So that's interesting. And of course, I think what you said about the SIPs, I think yes, SIP definitely changed the mutual fund industry, the good EMI as they put it, and maybe insurance maybe ऐसा change आ सकता है which could improve insurance penetration. So that's great. That's very, very insightful, sir, actually. Maybe we can just thoda move behind the scenes in terms of how technology is helping insurance companies reduce costs. Is there some cost element involved there?
So let's let's look at a very, very simple thing. When I entered the insurance industry in 2002, and the common thing that I heard was that the cost of issuance of a policy is something like 150 to 200 rupees. Okay. Now let's take an example of a simple travel policy, overseas travel policy, and the base policy is 500 rupees, or say a two-wheeler insurance, which at that point in time was 600, 700 rupees in terms of cost. The cost of administering the policy issuance was 150 rupees on a 500 rupee product was a 30%. So which basically meant that somewhere along the way, your administrative costs would come in the way of you wanting to write up a policy, or in terms of trying to sort of improve the penetration of that. We fast forward, and today, at a click of a button, customer comes in, he buys the policy is instantly issued. Yeah, of course, there are back-end technologies and what have you which are supporting. But if you were to sort of put all of that, you're talking in terms of, say, 8 rupees, 10 rupees, 15 rupees, sort of per se. Today we don't have to dispatch a policy, and all of that. So what it has done is that I think very, very importantly, the issue is not reduction in cost, but very, very importantly, we are today able to sell products which earlier we were not able to sell also. So we a little while back we spoke in terms of wallet products. How would I sell a 80 rupee product if the cost of issuance of that policy was 100 rupees? Okay. So what we are sort of beginning to see is that with technology, on one hand, we are able to reduce the cost of, say, policy issuance. On the other hand, we are able to reduce, say, the loss adjustment expenses. We are able to sort of reduce the cost of managing a grievance cell. Very, very importantly, fraud is a very, very live subject in India. As it is for insurance on a worldwide basis. Now, if you are able to sort of through technology and fraud analytics and data analytics bring down the level of fraud, you are actually able to sort of reduce the claims outgo, whichever way, sort of ultimately will benefit the customer, sort of in terms of making the policy more affordable. And that becomes very, very relevant for a country like ours, wherein the insurance penetration is a big subject. So technology from all these sort of viewpoints, or from all these ways that we look at it, does help bring in the cost element, but very, very importantly, it helps sort of consistency of service. It helps in better turnaround times. It helps in transparency.
So you're basically saying that it's not just about the bottom line, so to speak, but how this reduction in cost is actually enabling insurance companies to improve efficiencies in various other aspects of client servicing.
Absolutely.
Perfect. So, just one last thing, because I think this is something we've not touched upon, but it's really coming into conversations of late, is the subject of embedded insurance. Because I was just reading the other day somewhere that you don't wake up in the morning thinking कि भाई आज insurance लेना है, but the point where you actually want to buy insurance is at the point of transaction, when you're booking a travel ticket or when you're buying a car. So that's the point where you think about insurance. And kind of embedded insurance allows you to purchase insurance at your point of need. So just maybe if you have some thoughts on this subject.
No, I think that is a very, very relevant topic. I mean, when I'm booking my airline ticket, and especially an overseas airline ticket, and I'm not a regular overseas traveler, that necessitates me to have a annual policy. I mean, I would obviously think of a overseas travel policy at that point in time.
Right.
And if that is something which is made available there, I mean, it makes the whole sort of customer journey sort of seamless. So this is something which would increasingly sort of has been happening and will continue to happen. I think the important point here is that there must be a choice to the customer. I mean, these should not be things which are auto-ticked and you need to opt out. They all need to be in an opt-in fashion. And then as long as any of these insurances are in an opt-in fashion, I mean, if just by I mean, when I'm buying an airline ticket, if I just tick mark and say that I also want an insurance against cancellation, I mean, that's a good feature to have. Not something which is embedded within the product per se, that I need to opt out of it because I need not. I mean, I might be sure of my travel and for this journey I don't need that cover. Okay, so we will gradually, I mean, as we see the ticket size reduce, we will see more and more of some of these embedded options which are there. But I think the key word there is that it should be an option.
Option, yes. And then it, I think, circles back to what you initially said, that insurance is now becoming a pull product, which means that you don't have to push with that pre-selected version, and you can let customers
I mean,
choose.
If you allow me, I mean, that's something which, having been in the industry for the last 20 years and obviously buying insurance for 10 years before that, I mean, it has been a very, very important development per se. I mean, suddenly today, I mean, the issue is not about whether you need a health insurance or not. It is about that you have an adequate health insurance. I mean, and then also, I mean, a lot of times, especially people in service, I mean, you work for Outlook, I work for HDFC. I mean, sometimes, and our organizations are good enough to buy health insurance for us. Sometimes salaried employees, we forget that, I mean, this is just a base level of cover. And this is not a cover that is going to stay with us forever. And a lot of times as individuals, we delay our insurance purchase on health. I mean, till a point when we say that, okay, when we retire, we want to buy, but at that point in time, an insurance company is not willing to provide a cover. Because unfortunately, some event has happened in between, which, I mean, makes us a bad risk from an insurance company standpoint. So I think what is also very, very important is that, I mean, all of us need to learn to buy sort of early and buy adequate. I think these are two very, very important things.
Perfect. Buy early, buy adequate, and in the backdrop of that, I think the insurance industry is enabling customers to make optimal decisions in this space. So I just have one last question for you. So recently, the FDI limit in insurance was increased to 74%. Just wanted to understand any on-the-ground implications of this increase?
No, so I mean, you would recollect that when the sector opened up in 2000, 2001, at that point in time, 26% foreign equity was allowed. And then sometime in 2015, this was increased to 49. So this is in line with sort of what's been happening in the other sectors. I mean, what this would gradually mean is that, I mean, some international players who always thought that it's important to have control of the company. And some of these players who've been watching from the side and not entering the market space would now want to enter the Indian market. So what we will definitely see is that we will see some more international players entering sort of the market space. We would also see some of the existing sort of foreign partners sort of increase their equity stake. I mean, these rules have just come in. It's very, very early days sort of per se. But I think, over the medium term, we can clearly expect sort of these two trends to sort of very, very clearly play out.
Perfect. Thank you, sir, very much. I think, and again, I think everything that we've discussed today is also fairly cohesive because it's all, I think, kind of connecting back to our main 2, 3 themes of collaboration, digitization, and growth in customer service, and product side innovation. So my biggest takeaway, what you said in terms of one that change is the only constant. The insurance industry has significantly evolved, as you just exemplified, through the 20 years in terms of cost, in terms of innovation. But I think it'd be fair to say that the best is yet to come because that's the transformative power of technology.
Absolutely.
Perfect. Great. Thank you, sir, very much for sharing these amazing insights. Much appreciated.
Thank you. Thank you for having me on your show. Thank you.